Let's talk oil, the lifeblood of our modern world and the source of endless geopolitical drama. Today, we're looking at a deal that could shake the entire industry. Chevron, the American oil giant, is teaming up with Quantum Energy partners to bid for the international assets of Russia's Lukoil. The price? $22 billion. That's enough to buy every NHL team and still have change for your own island. This isn't just a business move. It's a seismic event in the energy sector, especially after the sanctions on Russia following its invasion of Ukraine. Chevron, a global powerhouse, and Quantum, a private equity firm known for bold plays, are joining forces to navigate a minefield of political and financial obstacles. Their target: Lukoil's international oil and gas projects, not the Russian ones. This is more than a transaction. It's a geopolitical chess move involving the US, Russia, Saudi Arabia, and some of the world's biggest corporate players. The outcome could reshape the future of Russian energy, test the limits of international sanctions, and show just how far companies will go for the world's most valuable resource. So buckle up. This is the high-stakes world of global oil deals, and the stakes have never been higher. Let's dive in. Scene transition. Lukoil. Maybe you've seen the name on a gas station, but it's much more than that. It's Russia's second-largest oil company, just behind the state-owned Rosneft. Founded after the Soviet Union's collapse, Lukoil became a global player with projects spanning Iraq, Mexico, Ghana, and Norway. We're talking about their international assets here, prime oil and gas fields, not the ones inside Russia. These assets are the crown jewels, long-term, cash-generating, and scattered across the globe. For Chevron, acquiring them means instant access to proven reserves, bypassing years of risky exploration. It's like buying a mature forest instead of planting seeds and waiting decades. The portfolio is diverse: deep water, onshore, partnerships with other national oil companies, spreading risk and maximizing opportunity. For a buyer, this isn't just about oil. It's about strategic, balanced, and highly valuable energy assets. That's why the price tag is so high, and why the world's biggest players are circling. Lukoil's international empire is a shortcut to growth, and everyone wants a piece. Scene transition. Why is Lukoil selling, and why is Chevron interested? One word: sanctions. After Russia's invasion of Ukraine, Western sanctions hit hard, isolating Russian companies from global finance and technology. Lukoil, though not as heavily sanctioned as some, found its international operations increasingly difficult to manage. Selling these assets is a strategic retreat, a way to cash out before they lose value or become unmanageable. For Chevron, buying from a Russian company under sanctions is unprecedented and fraught with legal and political risk. Any deal would need US government approval, threading a needle between weakening Russian influence and not handing Moscow a massive payday. The paradox: to weaken a Russian company, an American one might have to write a giant check. It's a geopolitical puzzle with no easy answers. Scene transition. So why are Chevron and Quantum teaming up? Simple: divide and conquer. They'll buy the whole portfolio, then split it up. Chevron taking the massive, long-life assets, Quantum targeting smaller, high-potential fields. Chevron wants to secure its future with big, strategic reserves that fit its global operations. Quantum, as a private equity firm, aims to optimize and flip smaller assets for profit. By joining forces, they can outbid rivals and make a cleaner, more attractive offer to Lukoil. Each gets what they want. Chevron boosts its reserves. Quantum gets assets to work its financial magic. It's a sophisticated strategy for a complex, high-stakes acquisition. The partnership is about scale, speed, and seizing a rare opportunity. Together, they're a formidable force in this global auction. Scene transition. Chevron and Quantum aren't the only ones eyeing Lukoil's assets. Enter Midad Energy, a Saudi-backed firm, adding another layer of geopolitical intrigue. Saudi Arabia, through its oil giants, already dominates global energy. This is a chance to expand even further. A Saudi bid signals a power play, projecting influence into new regions. The competition between US and Saudi interests makes this a high-stakes contest. For Lukoil, more bidders mean a higher price and more options. Other national oil companies and private equity groups are likely circling too. Whoever wins will pay top dollar and face intense scrutiny. The race is on, and the world is watching. Scene transition. To grasp the scale, let's compare. Oil history is full of mega deals. Exxon buying Mobil, Chevron merging with Texaco. But this $22 billion bid is unique because of its timing, amid war, sanctions, and global uncertainty. Past deals were about efficiency in stable times. This one is about seizing assets from a Russian company under pressure. The risk is higher, the stakes are global, and the context is unprecedented. Recent deals, like Chevron buying Hess or Exxon acquiring Pioneer, focused on stable regions. Here the assets are scattered worldwide, being sold under duress. If it goes through, it'll be the largest sale of Russian energy assets since the Ukraine conflict began. It could set a precedent for future sales and trigger a scramble for other Russian-owned resources. This isn't just big money, it's a historic moment for the industry. The outcome could reshape the global energy landscape. Scene transition. Deals this size are never simple. They're legal and political obstacle courses. The biggest hurdle, US Treasury approval, ensuring the deal doesn't violate sanctions. Any misstep could mean massive fines and a PR disaster. Politically, the optics are tough. Why let an American company hand billions to a Russian one? Congress and the public will demand answers. Internationally, every country where these assets sit must approve the sale, each with its own laws and interests. Negotiating all these approvals could take years. Financially, Chevron and Quantum are betting oil prices stay high. If not, they could lose big. There's also the risk of hidden problems, environmental liabilities, local disputes, or regulatory surprises. Due diligence can only go so far in a deal this complex. The risks are huge, but so is the potential reward. Scene transition. With all these risks, why bother? For oil giants, it's about survival. The key metric, reserve replacement. If you don't replace what you pump, you're shrinking. Finding new oil is slow, risky, and expensive. Buying proven reserves is faster and safer. The Lukoil deal gives Chevron an instant boost in reserves and production. Scale matters. Bigger companies have more leverage, can weather price swings, and tackle massive projects. Acquiring these assets strengthens Chevron's global position for decades, even as the world shifts toward renewables. It's a bet that oil and gas will remain essential and profitable for years to come. For Chevron, this is about being one of the last giants standing. The risks are real, but the rewards could be game-changing. Scene transition. So what does this all mean? This deal is more than a business story. It's a turning point for global energy. If Chevron and Quantum succeed, a vast portfolio shifts from Russian to American hands, redrawing the energy map. It could set off a wave of similar deals as other Russian firms are forced to sell. The world's supermajors are proving they can capitalize on geopolitical upheaval. The outcome will be watched by every energy executive, diplomat, and investor. For most people, the impact won't be immediate, but the long-term effects are profound. It highlights how energy, politics, and global security are inseparable. The fate of this $22 billion bid is uncertain, facing legal, political, and competitive hurdles. But its very existence shows how business and politics now move hand in hand. Whether Chevron wins or a rival prevails, this sale marks a permanent shift in the world of oil. And you can bet we'll be watching.